Some business news now for you on France 24, and stocks have been actually slipping in Asian trade as investors await the signing of an initial UN-China trade deal. And their sentiment somewhat dented, in fact, by comments from the US Treasury Secretary that tariffs will remain in place for now. Steve Mnuchin saying the tariffs in place until the completion of a second phase of US-China trade agreements, likely not before the US election in November. As you can see, right down across the board, biggest dip there on the Hang Seng, in fact, in Hong Kong. A little earlier on, we spoke to market analyst Han Tan from FXTM.
This morning, investors had to contend with fresh headlines that, once again point to the tremendous gulf that still remains or that is set to persist between the U.S. and China. So from here on out, I think investors will want to know just how quickly, if ever, those trade differences can be bridged. Look, in a very broad sense, yes, the world as a whole stands to benefit from diffused U.S.-China tensions. We have seen the world economy been dragged through this period of heightened trade tensions over the last 2 years at the expense of the manufacturing sector, for example. But depending on the details of this deal, some countries could see some collateral damage. So, for example, the likes of, say, some countries in South America or Australia could see their agricultural exports wane if China is forced to ramp up purchases from the US, or the likes of Hong Kong could see or could lose some of their shipments if China is forced to send all of its imports directly to ports on the mainland. So, in short, the world as a whole stands to win. As for losers, I think the devil is in the details.
Han Tan there from FXTM. Now let's stay with that imminent signing of that Phase 1 deal to end months of trade conflict. France 24's Camille Nedelec has been taking a look at the effects that the conflict has already had on some US businesses and farmers.
As the US-China trade war reaches a ceasefire, many Americans will be breathing a sigh of relief, none more so than soybean farmers. After China whacked tariffs on soybeans in response to US tariffs on Chinese goods, soybean exports fell from $12 billion in 2017 to just over $3 billion in 2018.
Resolving this trade war is definitely going to be a great step in the right direction. We knew as soon as the trade war escalated and the price of soybeans dropped so bad that we were in trouble.
The rest of the farming sector is in a similar state, despite an emergency package of $28 billion of government aid. Importers are also facing fallout as Chinese exporters failed to cut prices. Buyers had to absorb the cost or face passing it on to their consumers. This bike company used to depend on factories in China to make their bicycles. To escape the tariffs, it decided to relocate production to Taiwan. But it was a bumpy ride.
So when you're looking at a bike, there's so many different components. All of these small parts are produced by specialty manufacturers that specialize in a particular component or a particular set of components. So it's not as simple as just moving over and going to a one-stop shop. That doesn't exist.
Bilateral trade declined by over $100 billion since the start of the dispute. And though Trump has held off from imposing a new round of tariffs, the ones currently in place look set to remain. So the consequences of the trade war could drag on long after the deal is signed.